week. Joining us to talk more about the markets, Tanious, global market strategist at JPMorgan Asset Management. Joe, always good to see you.
Always good to see you too.
Tough month for August, but September is typically the worst month for the stock market. Do you expect another tough month for the markets?
You know, I'm expecting a busy month for the market, and as Steve just pointed out, it's going to start off with a bang, really. You've got a short week next week, but it's going to be very, very filled with economic data, not only from here in the U.S., but also from abroad. And I think as people are returning back from vacations, there's going to be quite a bit to chew on.
Joe, you heard our report from John Harwood in Washington talking about options that the U.S. military may take over the next couple of days. Let's say something does happen this weekend. What kind of market reaction are you expecting on Tuesday?
You know, honestly, I think the initial knee-jerk reaction is probably going to be a little bit negative. Despite, all these reports that I've read and that, this effort is going to be very targeted, it's going to be very measured, it's going to be very brief, it's hard to imagine or envision a scenario in which U.S. action doesn't have greater implications on the entire region. Of course, you have to worry, what does it mean for tension with Iran? What does it mean as far as what's going on in Egypt? Is it going to have any impact there, of course? And not only just what's going on in the Middle East, but also what about relationships outside of the Middle East and relationships with Russia? I think, you may very well see oil prices start to pick up again. And as a result of that, I think there may be a bit of a pullback in the markets.
Last spring, Fed Chairman Bernanke threw out there that there was a possibility they began tapering in September. September's upon us. A lot has happened since he made that statement, though. Do you think they're likely to begin tapering or not?
I do think they are likely to begin tapering this September. A lot has happened, but it's important to remember, how the Fed is looking at this. It's really a cost-benefit analysis. What are the benefits of additional asset purchases from this point relative to the potential costs? And it should be pretty clear the economic backdrop has been improving. It's not perfect, but things are getting better. And I just don't think additional asset purchases from this point make any sense. And for that reason, I suspect you probably are going to hear of the Fed tapering later next month.
All right, so this is an extremely complicated and tricky time for investors. What have you been telling your clients at JPMorgan about what they should do to prepare for whether it's about Syria or the Fed or, the jobs report next week? What should they be doing with their portfolios next week?
I think first and foremost, it's to keep an eye on the fundamentals. In the near term, there's always going to be noise. And of course, any international action on behalf of the U.S. going into Syria or invading the Middle East in any fashion is clearly going to have an impact on the capital markets in the near term. But focus on the fundamentals because in the long run, stock markets tend to follow the fundamentals. And that should tell you that things are in fact improving. That having been said, we are expecting a little bit of noise in the markets next week, and clearly what's going on in Syria only complicates things. I think you need to have a very disciplined approach to risk-taking, and of course that means the right exposure to both stocks and risk assets and the right exposure to safe assets such as bonds, despite the fact that rates may be rising.
And that's Joe Tanious, a global market strategist at JPMorgan Asset Management. Thanks a lot, Joe.